Hello everyone and welcome to today's major markets update for Friday, October the 28th. The rally continues. The big bounce that I have been looking for over the last months is here. The Dow Jones and Russell 2000/IWM already forecasted it. And today the S&P 500 joined forces because it broke with authority above the September 6th low at 3,886.75 to be exact. We came already within spitting distance on Wednesday. I think we were off by 60 cents. So we were getting very close, but no confirmation yet because we didn't overlap and also because technology sector and the semiconductors were lagging. I was tracking a leading diagonal wave for those, and that seems to be the right call. So far, so good. The perma bears will see this as a counter trend rally before the third of the third wave will hit, and we're all going to die. The perma bulls think we're still in a bull market, but I think if you do objective analysis, look at all the weight of the evidence, it is quite obvious we are in a prolonged bear market, except maybe for the Dow Jones. The Dow Jones still has the possibility to be in a bull, and I'll show you for a moment. Technology, no, and I think the S&P 500, no. So let's go and have a look. And remember, when the evidence changes, we change accordingly. If we would have broken below the October 13 lows because of the bad earnings of Amazon, Microsoft, Google, then we knew we had a fifth wave on our hands to lower prices, in this case 9,500. But we already figured out that Dow Jones did a unorthodox 5 waves lower. Unorthodox meaning not exactly following the standard ideal Fibonacci-based impulse path. That doesn't invalidate that path, it is simply the framework we start with, and then we see if the market will follow it, yes or no. When the evidence changes, we change accordingly. That's what we do. That's trading, and trading is nothing else than being flexible and open-minded and making sure you trade the plan, but first you plan the trade. So starting off with the most bullish one, the Dow Jones. Continuous upside surprises. That is bullish. There is no other way to interpret higher prices. I don't see why this is all of a sudden a second wave. People that follow the S&P 500 only, I think, live in a very narrow world. You need to focus on other indexes as well, because it is a market of stocks and a market of indexes. And this is behaving really nice. On Wednesday, it tagged 161.8% extension to the T. Picture perfect, and we had quite an ugly candle. But the market decided to subdivide higher. That is why I always say it reserves the right to do something else. It didn't do the wave 4, instead it went higher, so wave 3 is still underway. This means the whole upside path will be larger than originally anticipated. That is fine. We anticipate, we monitor, and adjust. So that brings me to my system trading alert. This one went already long. The Dow Jones, the 3-time Dow Jones, UW Dow, UDOW, October 13th. And it's been long ever since, selling partial positions into strength. We're still long. Let's say we bought 1,000 shares here. We're still long 250 shares. All it does now is raise the stops. That's all it does, trailing stops. This is so easy. Your explicit grandma can do this. The 3-year-old can trade this, okay? You're not doing yourself a service, honestly. Yes, there will be losing trades. Did we get stopped out on some of them? Yes. Are you backing it? Yes, it is. So I'm fully automating this service, meaning we're developing full algorithms that will follow these systems exactly, trade them accordingly. And if you want, buy those algorithms at some point, connect it to Interactive Brokers, who has a great platform for it. They will just automate your trading for you. You have to do 2 things, Jack, and you know what. It is the pinnacle of trading. You don't need to analyze anything anymore. I think it's the holy grail of trading. You know how much interest I get? Zero. But it's fine. It's all the best to you and whatever endeavor you do. I prefer to keep it simple. I'm sure there are ways that make more money, but I think, as Einstein said, simple is best. Enough about this. Move on to the markets, because trading algorithms are just what they are. They just apparently don't make any money. So here is the one and only chart that still has a possibility for this, a 4 and a 5. Okay, this is the Dow Jones. I'll show you the NASDAQ 100 and some other ones that have simply overlap. I can even show you the work from Avi Gilbert. Not to say that he's wrong, but I wonder why he's keeping the fourth wave alive when the fourth wave clearly overlaps with the first wave. So that's not allowed in an impulse unless we're dealing with some sort of diagonal. But the whole rally since March 2020 into January 2022 does not look like threes, so to say, overlapping diagonal path, as we will see for the NASDAQ 100. Now that's a diagonal. So this has still the potential to make a new all-time high. Remember, we don't have to have every single index doing the same thing, okay? If you would go back to the period between 2000 and 2003, look what technology did, 80% correction. Look at what the Dow Jones did. It pretty much went sideways for 2 years. It then had the final C wave lower, and it was just one nasty, disastrous sideways slope. Technology fell out of bed and off the roof and off the mountain. The Dow Jones didn't. So now we might see a reverse. It is what it is. When the evidence changes, we change accordingly. This can still be a wave 4, very, very deep. But again, as we've seen here, the market doesn't have to necessarily listen to the Fibonacci extensions. It often does. It often rhymes, as we will see with the other index, but doesn't have to. So that's why we remain flexible, open-minded. When the evidence changes, we change accordingly. It's a stochastic, dynamic, multivariable environment we're dealing with. You couldn't be dealing with a more complex environment than this one, except maybe the climate and the weather. That's about it, but it's the same. It's the same stochastic, multivariable input environment we're dealing with. That brings me to the NASDAQ 100. Here we had the ideal wave 4 target zone. We bottomed right in it. Isn't it amazing? Bad earnings. Look where we are. I think if a market cannot crash on bad earnings, it is about time to be a little bit more bullish than what most people have been over the last 10 months. Okay? So this tells us something. We haven't confirmed wave 5 yet, but I don't think this is a wave 4 in red anymore. Unless we go below, of course, this wave 2 low. That remains the line in the sand. We have not confirmed this wave 5, but we're getting awfully close. If we do, then we have a leading diagonal. Okay, 1, 2, A, B, C for 3, 4, etc. Also the ABC, perfect. Shorter term, we topped right here in this forecasted C/3 target zone, which is then, of course, C of 3. And we did a decline here in the green arrow. Let me zoom in a little bit more. There. You can see the down arrow here is the length of B/2. It's the same almost as the length of this wave 4. And then 5 is 1, targets again about 11,900. Okay, again here between 11,900 and 12,100 would be the ideal wave 5 of a target zone. So all I've done now is, assuming we are indeed in this smaller wave 5, and I have no reason to believe it's not, that should then complete wave A of A. And we get B and then C. Somewhere similar along the lines that we were here. And then we get A, B, and C. So this is going to last a while, okay? This is going to last multi-month. This black C wave is the money-making wave. This red C wave is a money-making wave, all right? Those are the ones. You can already see this is pretty doable trading. But you can see how the technology sector is still ways off compared to the Dow Jones. Look where the Dow Jones is. It is spitting distance from the August high. Where is the technology sector? Not even halfway towards the August high. So we're really dealing with two different markets. The markets are telling us something. That's the message. The why on why things rally and all those things do not matter because you cannot trade the why. All you trade is price, period. And the rest, couldn't care a rat's ass. There you have it. So here then is the bigger picture of the NASDAQ 100. Okay, so what we see here is, I need to adjust this one here. This is C, this is the A, and then this is B. I was looking at for about a high of 14,300. We got a little bit there, and then this is C. The exact labeling is, of course, not. I actually should do it there. This is then C, and then we get a larger B wave, etc. Okay, so we bottomed right here in the ideal target zone for this black wave C. Okay, or sorry, there, black wave C. So I want to see it like this. I will have to upgrade there, and then this is of course A, and then this is B. Okay, there we go. This is A, this is B, and then here we have A, and then we have of course another irregular flat B wave, as we've already figured out. So just minor changes to the labeling of the chart. That's all we're doing. Otherwise, looks pretty good to me. Looks pretty good to me. So now we should be in this B wave, and then we can see. Why? Well, look here where the wave 1 high is. It's there. We've overlapped it by a gazillion miles. Fourth waves are not allowed to overlap. But if you look at the Dow Jones, we don't have that overlap. So the Dow Jones can still try to squeeze out the last fifth wave. Okay, so no overlap. So technically the Dow Jones is still okay. Doesn't have to, but I want to be aware of it. Then the S&P 500 will probably be stuck somewhere between a rock and a hard place because it is a hybrid index. Okay, so then we have, of course, our retrace target zones. We've bottomed here in this ideal C target zone, so wave B should then go somewhere here. We don't know yet how much of a retrace we're going to get, anywhere between there, but ideally there. So that is our wave B. That matches what we have on the daily chart between about 13,800 and 15,300. 13,000, pretty good. Okay, it's pretty darn good. Remember, these weekly charts are your rough roadmaps. Okay, there we go. Bottom there where we had to. I like it. Let's have a look here. Massive positive divergence on the weekly charts, as you can see. So that is really good. Look here as well, how much more money has been going into the market. Look at that. Liquidity drives markets. Okay. Compare that to the June low and the October low. October low is both the bear market low most of the times and the bear market killer. So I like it. I see no reason to change my tune. This is cycle 3. Okay. Looks good. Excellent. See no reason to change my tune. Please prove me wrong. Moving on to the semiconductors. The semiconductors are more equal to the technology sector, obviously, because the technology sector needs chips. 1, 2, 3, 4. Bottom right here in the ideal 4 target zone. Right on the top and strong reaction. Topped here in the 3 target zone, strong reaction. So you see, these target zones do matter. They are not necessarily unimportant as they were for the Dow Jones currently, as we saw, of course, with these. We bottom in the target zone, top to the target zone. So I think for the NASDAQ 100, we're going to go to the target zone. Same for the semiconductors. 5 is 1, targets around 2550 plus or minus 50. That should be A1, B2, C3. Don't know yet if it's going to be an impulse or not. Preferably not. As you can see, also the semiconductors not even close. Relative to the Dow Jones is now somewhere already at around 2,900 if it was the semiconductors. Semiconductors are just 2,400. They're still ways off. Will they play catch up? Who knows? Who cares? All we care about is this pattern. So A, B, C. That's what I'm going to look for. I don't know yet how high exactly A1 will go, but this is the ideal target zone. Since 3 or 4 were ideal, I expect wave 5 to be ideal. We then get the retrace, probably back to about current levels, not current levels, but the lows of the week. And then we start the next rally. Also here, of course, lots of positive divergence going on the daily time frame. As you are well aware of, So that is really great. All of that is, of course, your condition. It is not a signal. And I still prefer to look higher. Look at the MACD. It's pointing up. It's not pointing lower. Nothing is pointing lower. But the semiconductors and technology sector are way behind the rest of the market. So here we have the S&P 500. We already got our first warning this week on Monday. It got confirmed, the first warning on Tuesday with the break above it. And then Wednesday, Thursday, we just pretty much meandered in between these two critical levels, 3,800, 3886.75. And today we broke out with authority. So here are the ideal target zones. I don't know why. There, we bottomed right in it, off the table. Done, dusted. This path is confirmed. Now we're in wave 5 of C3. I don't know yet if wave A is going to be 3 waves or 5. Again, I prefer 5, but if it's 3, it's 3. We know soon enough if we get this 4th wave versus the B wave. All right, we know the overlap levels to watch. So we're now in this wave 5. A 5 is one relationship from there, targets exactly just about 4,000. Maybe a little bit less. Let's have a look here. Somewhere around 39.92. There you have it. Okay, 39.90. So we have some ways to go, a little bit into the target zone. Massive positive divergence everywhere. And divergence is only divergence till it's not. But I like it. So this still looks good. And now we have to figure out if black wave. I don't know what happened. Why did it move these labels? Black wave A is going to be 5 with 3 waves. So that we don't know yet. But I do know from the Dow Jones that the multi-month bounce has been announced, also from the IWM, now also for the S&P 500. Bears want to see this A wave as a wave 1, now in a wave 2, and then 3, 4, and 5, and all hell will break loose. To be honest, if I see a weekly chart with this much divergence, I don't think so. This is not a setup for a 1, 2, 3, 4, 5. This is massive divergence. Look at all this liquidity. Either these big boys are completely wrong, because these are the big boys that drive liquidity. All right, the institutional buyers. You and I mean nothing for the markets. We really don't. I don't care if you put $1 million in or not. You got to have billions and trillions to move the market. That's really what it is. Your thousands or your hundreds of thousands may mean nothing. All right, they really don't. It's fine. We don't have to have any delusions of grandeur. But this does not look like somebody's been selling. This looks like somebody's been buying over the intermediate term time frame. So that brings me then back to the S&P 500. Are we going to get 3 waves for A or 5? I prefer 5 because then we get a 3-wave pullback and another 5 high. Bigger picture wise, so far filling in quite nicely. The first black line here has been filled in. The second black line has also filled in. So now we should be in this path. And it can go as high as 4,500. Okay? No reason why not. Have it here on the chart. Okay? So that all fits well, and then we should see the next decline. This is going to take a while, okay, months. That's what I expect. So we're just, once again, in the starting gates, right? A, B, and potentially something similar to the NASDAQ 100, A, B, C, and then another A, B, C, and then another A, B, C. So this can take many, many months. That's fine. I have no timing tool available other than some of the seasonality charts I will share with you. Then we look at the IWM. It's also picture perfect Fibonacci pinball, according to Avi Gilbert's work. We already broke above the September 6th low, way back here in October's 18, I believe it was 13. Yes, 18. Okay, that was already the signal that this index had bottomed. And here on Friday last week, we bottomed. We got a rally, a pullback, rally, 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 pullback, rally. 5 is 1, targets exactly around 186-ish, somewhere there. That green target zone here, which is right at the 200-day moving average, should then be wave 3. Then we get the wave 4 and a 5. Of course, wave A can also top here to be determined, but everything is still nicely on track. Look at the acceleration we have on the MACD. I see no reason to turn bearish on this one. unless we break below 176.59 from current levels. I don't see it right now. Okay, so that brings me then to, of course, seasonality. The midterm election year seasonality pattern since 1946, as you see here. All right, let's zoom in a little bit. At this bottom, late October. Okay, so we got the bottom mid-October. That's fine. It's all averages. Rally into early November, and then November will be kind of choppy, and then end of year rally. Okay, so that's good. So how would that align with this? So this would then be 3, 4, 5 into November. Maybe wave B will be this, and then wave C. Okay, so I like it. It kind of matches. I've warned for a bottom later in October. Okay, off by a week or two. It's fine if you use average data since 1946. So another way to look at seasonality is provided by SeasonX. The one chart I showed here is from the Stock Traders Almanac. Another way to look at it is using this path. This path had a low in late September, rally, and then a low in late October, and then rally, rally, rally. Okay, so far pretty reasonably good. How are we then looking for next year? Next year is a pre-election year, and it's pretty bullish until the summer, right? It's an average, so we don't have to put too much weight on it, saying it has to follow it exactly, but it shows that we could be pretty bullish for the first part of next year. I don't want to lay too much weight on this, but it gives us a general roadmap and a general expectation that matches pretty well with what we're going to expect from an Elliott Wave perspective. Okay, so that brings me back to using my ETF trading alert service and secret service. All right, I think it's underutilized. I'm very grateful to it. We've been long the UDAO since October 13th. Raise your hands if you've been long the index since October 13th. I'd really like to know if you did or not. So we've been long the S&P 500 since 1021, TNA since this week, and now my systems are saying to go long Apple, NVIDIA, DDA, etc. I'm very grateful to it. It's a great tool to have that you can have in your toolbox of trying to make money. Yes, you can say I'm selling all my subscriptions. Well, I guess I am, but I also want this to be a win-win situation. A win for you is a win for me. I'm using it myself. I'm not complaining. Being long the Dow since October 13th, I think is a fantastic feature. Are there some misses along the way? Absolutely. Can the trading system be improved? I'm sure it can. We're working on it. At some point soon enough, this will be fully automated trading alerts. It will take all the errors that I've made so far out, because sometimes I read the chart wrong, where you should have used the close of the day, but I used the high of the day, for example. All computerized, and hopefully at some point it will be able to actually trade for you as well. With that, thank you so much for being a Valued Premium member. I really appreciate it. Have a great weekend, and I'll see you all on Monday.